In the past 24 hours, the crypto world has been electrified by a cascade of developments that could redefine not just the price of Bitcoin, but the entire landscape of digital assets in the United States and beyond. The stakes have never been higher. After weeks of anticipation, Bitcoin shattered its previous all-time high, surging past $112,000 on July 9, 2025. A wave of bullish momentum swept the market, fueled by a combination of anticipated Federal Reserve rate cuts and record-breaking inflows into Bitcoin exchange-traded funds, most notably BlackRock's iShares ETF, which has seen daily additions of around $370 million. In the aftermath, Bitcoin's price soared to intraday highs near $119,498, before settling just above $119,000, still up over 2.6% in a single day. But as the market celebrated, a powerful undertow was forming in Washington, D.C. In an unexpected twist, the U.S. House of Representatives failed to advance a procedural vote necessary to begin debate on three landmark pro-crypto bills. These bills, packaged together with Defense Department funding, were designed to give the U.S. regulatory clarity and spark a new era of innovation in digital assets. The setback didn't come from ideological opposition to crypto itself, but from political disagreements over the bill's packaging and the process of debate. 13 Republican lawmakers joined Democrats to block the measure, raising concerns about the scope of the legislation and the perceived risk of a U.S. central bank digital currency. The result? A dramatic pause, not a defeat, a delay that injected a fresh dose of uncertainty into an already volatile market. For traders and investors, the timing couldn't have been more dramatic. Bitcoin had just completed a $14,000 rally in a matter of days, driven by a $1.3 billion short squeeze that wrecked traders betting against the king of crypto. As on-chain analyst Willy Woo observed, the breakout was liquidation-driven, and now the market needs to consolidate before the next leg up. This is classic Bitcoin. 5 steps forward, 2 steps back. Rise, cool off, rise again. The current pullback, experts agree, is not just expected, but healthy. It's the natural rhythm of a market whose foundations are growing stronger with every cycle. Beneath the surface, the real story is about more than just price action. The failed vote in Congress was not the final word on crypto regulation, but it was the all-important gateway vote. The step that allows for formal discussion, debate, and ultimately, the passage of rules that could shape America's stance on digital assets for decades to come. The bills in question, the Genius Act and the Clarity Act, represent the most bullish, innovation-friendly proposals ever to reach this stage. The Genius Act aims to support technological advancement and classify certain tokens as commodities, paving the way for broader institutional adoption. The Clarity Act would shift the regulatory focus from punishment to guidance, offering much-needed certainty to builders and investors alike. If these measures pass, the U.S. could move from an era of regulatory ambiguity to one where legislation enables growth, attracts capital, and positions the nation as a global leader in crypto innovation. This is the regulatory shift many believe is needed to unlock the next supercycle, a wave of institutional investment that could propel Bitcoin and select altcoins to unprecedented highs. Yet, as the past 24 hours have shown, the path forward is anything but certain. Lawmakers' concerns about the scope of the bills, especially regarding potential support for a U.S. central bank digital currency, have temporarily derailed the process. Prominent voices in Congress, such as Representative Marjorie Taylor Greene, have insisted that the legislation does not do enough to prevent the emergence of a state-backed digital dollar, a concept that makes many in the crypto community uneasy. Others bristled at the bundling of crypto policy with defense funding, a classic case of Washington's legislative sausage-making. For now, the market is in a holding pattern. Bitcoin is trading within a critical support range between $119,000 and $122,000. All eyes are on Congress. Will lawmakers return to the negotiating table and revive these bills, Or will political gridlock leave the U.S. trailing as other nations move forward with crypto-friendly frameworks? Analysts remain optimistic. The technical picture for Bitcoin is as strong as it's been in years. The breakout from months of consolidation is intact, and while the current correction has rattled some nerves, it is widely seen as a routine pause after such an explosive move. Historically, Bitcoin's greatest rallies have come not in the immediate aftermath of new highs, but after periods of consolidation and uncertainty, when weak hands are shaken out and the foundation is laid for the next advance. Some projections now see Bitcoin reaching $200,000 by the end of 2025, provided that institutional adoption continues and the regulatory environment becomes more predictable. The surge in ETF inflows is a powerful indicator that the smart money is positioning for a long-term bull market. If Congress can deliver a clear, enabling regulatory framework, it could unleash a tidal wave of new capital, not just from hedge funds and asset managers, but from corporations, pension funds, and even sovereign wealth entities. But the opportunity is not limited to Bitcoin alone. Altcoins, especially those positioned to benefit from regulatory clarity and institutional engagement, could see parabolic moves if the legislative winds shift in their favor. The Genius Act, for example, would offer a path for certain tokens to be classified as commodities rather than securities, removing a major barrier to their adoption by mainstream investors. The Clarity Act's focus on guidance over enforcement could spark a renaissance in blockchain development, as entrepreneurs gain the confidence to build without fear of arbitrary legal action. For traders, investors, and builders, the next 48 hours are critical. The market's immediate fate may hinge on how Congress responds to the failed vote. Will cooler heads prevail, allowing the process to move forward? Or will partisan divisions continue to stall progress, leaving the U.S. at risk of falling behind in the global race for crypto innovation? Regardless of the outcome, one thing is clear: we are at an inflection point. The combination of explosive price action and the prospect of sweeping legislative change creates a once-in-a-decade opportunity. This is a market that rewards vigilance, adaptability, and informed decision-making. The most successful participants will be those who stay on top of both the technicals and the policy headlines, ready to act when the next chapter begins. If the bills return to the floor, and there is every reason to believe they will, the impact could be immediate and profound. Institutional investors, hungry for regulatory certainty, could flood into the space, driving liquidity and valuations to new heights. This would not only validate the thesis of Bitcoin as digital gold, but could also spark a new wave of innovation across decentralized finance, Web3, and beyond. In the meantime, the action plan is clear. Monitor the key support zone around $119,000 to $122,000, watch for fresh signals from Capitol Hill, and stay informed. This is not a time for complacency. Whether you are trading daily price swings, investing for the long term, or building the next generation of blockchain applications, the decisions you make in the coming days could have outsized consequences. The fusion of regulatory clarity and bullish price action is the rarest of catalysts in any market. When they align, fortunes are made. As the dust settles from this week's drama, the crypto world is holding its breath. The next move, up or down, will be shaped as much by lawmakers as by traders and algorithms. Stay sharp, stay agile, and above all, stay informed. The next chapter in crypto's story is being written right now, and everyone has a front row seat. Will Bitcoin break $150,000 before the next regulatory wave hits? Only time and a handful of votes in Congress will tell. But the opportunity is here, and it's too big to ignore.